What's up, guys? It's November 14th, 2025. We're going to do a 10-minute breakdown of the E-mini where we talk about trap traders, second legs, and market context. If you guys are interested in seeing how I do this live, check out the membership section where I go over winning and losing trades, all based around breakouts and pullbacks, catching that second leg. Let's get into it. I ended up taking a $400 rip today. Kind of sucks. I got caught in an IV spike. I went short on this bar. Okay, broke out against me. I exited, saw the rally. I bought this bar to get long, and up right around this bar, I was up $800. And then these two bars happened. I thought, okay, first touch of the EMA, we'll probably rally back to at least get a retest here. Instead, this bar alone ripped me for like minus 400. So from being up 800 here, minus 400 down here, and I exited, and that was that. Kind of an upsetting day, but I'm still up on the week. Yesterday was a big day for me, so it is what it is. And it did eventually get a retest. Didn't come back to the most recent, the swing high, but I would have made money. Well, I don't know if it would have got crushed here. 0 DTE options are tough, so just be careful if you guys are going to be trading that. So we got the weekly chart on the left, which is, okay, there's the weekly chart. And we got the daily chart on the right. Weekly chart, we have 3 bear bars in a row, something that hasn't happened in a long time. Last time it happened was March 3rd. The week of March 3rd, we had 3 bear bars in a row. And then the last time it happened, that was actually, we had 4 bear bars in a row, pullback, and it never happened again since. So now we have 3 bear bars in a row, something that's interesting for the bears. It is more sideways though, big tail, so there was a rally. There was a hidden leg 1, pullback leg 2, bulls failed to get back to the recent swing. And that created a double top. The bulls that bought here are going to buy more lower and get out break even. That's what could cause a sell-off because they're selling out of longs, trap bulls. Some bulls would have made a small profit, the ones that averaged in. But so daily chart here, we had 3 legs down, leg 1, pull back leg 2, pull back leg 3. This entire structure is strong to get a second leg 1, pull back leg 2. And just how the bulls failed to reach their target here, the target for this would be at least 1 tick below the swing, and bears failed to do that, so the market's starting to contract. Kind of sucks because the majority of us are breakout traders, so we like expansion, but there's still some really good range. Yesterday had a good range. Today, great leg up, and you could scalp trading range. Big gap. So look at this gap down. It got continuation. Look at this gap down. It got a reversal. What's the difference between them? Well, this is the start to a breakout. The market cycle tells us trading range. So breakout, pull back. Now we're channeling lower. At the end of a market cycle, we get a trading range. So now this gap down, it's breaking out of this range, but the overall context is trading range behavior. We're coming close to the swing low, ends up being a rally. So if you're wondering why yesterday got continuation and today got a reversal, it's the market cycle. Big gap down, bar 1, bear bar, closing on its low, but no follow through, bar 2. I wanted to buy bar 3, but the premiums were so juiced up. I was like, I'm not buying 1 contract for $300, and then that $300 would have been huge. It is what it is. 1 second. So big gap down, bar 1, bear bar closing on its low, bar 2, bull bar closing on its high, and then really good follow through 3, 4, 5, and 6. 6 bull bars in a row, strong to get a second leg. Bar 7 is the first reversal, so you could buy that for a fade back to the recent high, and you can see scalping that work. So you buy here, target here, you make 1 R very quickly, and the market goes sideways. Bears try and get a few legs lower, leg 1, pull back leg 2, pull back leg 3. 3 legs fail. We have a small trading range, breaks out bar 12. Bad follow through 13, but it is a form of follow through. Closing above the EMA. It would be nice if this had a bull body, then we could say good follow through. Not the best, but it is follow through. 14, big bull bar closing its low. Big bull bar closing on its low with follow through 15 and 16. So now we have 12 through 16. Strong to get a second leg down. You see them again. Bears trying to get 3 legs lower. Leg 1. Did I say strong to get a second leg down? Excuse me. Strong enough to get a second leg up. Bears got 3 legs down. leg 1, pull back leg 2, pull back leg 3. Bar 20 is testing the high of 16, and that causes another leg up, 20 through 24. Really nice rally. I think leg 1, pull back leg 2, pull back leg 3, and there's enough momentum in this leg to get its own 3 legs. Leg 1, pull back leg 2, pull back leg 3. Kind of miscounted the legs a little bit. I thought we would at least go above the EMA, but this is a third leg within a third leg. Double top, bulls that buy up here, buy more lower. They're going to sell here because they're going to get out the original entry, and that causes a sell-off. Price action fractal, so on a smaller time frame, look at this structure here. This is 3 legs down. Leg 1, pull back leg 2, pull back leg 3. Leg 1, pull back leg 2, pull back 3. 3 legs down, and then look, and then it led to a rally. Now look at this structure here on the 1 minute. 3 legs down. Leg 1, pull back. Leg 1, pull back leg 2, pull back leg 3. Led to a rally. So we're in a bear regime because we're under the EMA, but the context was market cycle. That's train rate behavior. So tricky day. And we go sideways for the majority of the day. Leg up, and then we go sideways. So 3 legs down, that leads to a rally. If you're short here and you start to see 52 and 53, I think you definitely have to get out on 53 because that's a big breakout bar. Sean's to get a second leg, and it does. Shallow pullback, 54 through 57, and then it leads to a rally. Leg 1, pull back, leg 2, pull back, leg 3. 67, unfortunately did not retest the high of 38, which is, if I wasn't long anymore. If I was long, that's something I would have liked to do. I actually shorted up here, and I got out down here for break even because this rally. I'm trading options, so I'm okay with scaling in. But if I was trading futures, I would have exited. And I do trade futures. I'm just trading the overnight session on futures, and then I'm looking for swings intraday. So, yeah. Then we sell off for two legs down. Second leg trap is very common. Leg 1, pull back, leg 2. Second leg trap here. All right, guys. Hope you had a good week. I hope you guys are gonna have a good weekend. It's Thanksgiving coming up, so let's be smart. Let's start planning for 2026, and let me know if you guys are trading the system or not. Thank you for your time, everyone. Goodbye.